Cool. So I'm excited to kick off our next portfolio thesis video. I'm here with the founder of Flower Co, Ted, um, and I'm really excited to kind of go over the thesis on Flower Co. There's a lot to like about Flower Co from the very beginning, and it's been an amazing growth story. As some context about how we eventually got into touch with Ted, looking back in time, we have internally at VU a few different core vertical thesis teams. We have a consumer team, and on the consumer team at the time, we had someone named Helene who had built out really her own cannabis thesis as well, even a more vertical focused thesis on cannabis. And I think at the time, Ted, when we first met, you had I think we're just in the process of finishing up overall the of doing YC. I think you had like just about to graduated from YC or coming out of it.
Yep.
And the I remember the first time that I heard what Flower Co was doing at our partners meeting was that the industry of cannabis is now becoming legalized, and you have some interesting challenges that come with that, which is that legal cannabis has significantly more regulatory fees that make legal cannabis a lot more expensive than the illicit market. And the high level pitch was, what if you could create like the wholesale Costco, for the weed industry? And we thought that was pretty fascinating, just from a high level, again, initial thesis before you kind of unpacking that even more. But the idea that if you could, the problem with the industry was that it was still going to be more cost competitive to continue to buy illicit cannabis, even with legal cannabis, but you don't really know who's smoking what when someone's walking around the street. So, how do you actually create an effective marketplace that can compete with the illicit market, and really provide a new type of offering other than just something that goes with the additional fees that come with the new legalization of cannabis? And so that itself was a really intriguing thing. Oftentimes, we're looking for market opportunities that are being unlocked for the first time. In this case, you had the legalization of cannabis became the unlocking of a market that couldn't have been actionable before. You have a really interesting background I want to get into where, from a consulting perspective of coming background from McKinsey, looking at strategy, looking at opportunities, um, but kind of creating an approach that is super, super unique to the overall offerings of what's in the market for buying cannabis. So maybe to just kick things off, how did you end up initially thinking through the opportunity of the overall market play of that there could be this new kind of Costco wholesale opportunity for the cannabis space?
Yeah, and I have to interrupt you just to be clear because we did get a cease and desist at one point. We are not the Costco of cannabis. We
Sorry.
are not the Costco of cannabis, in case anyone's wondering. But we do have screaming good deals on weed, and we're the best, we're the most affordable place for people to consistently get their weed delivered in California. So, yeah, when I was starting to build Flower Co, thinking of the idea, I was had already been in the weed industry for a couple of years and had seen how this industry, as you're pointing out, it's not going from 0 to 1 in the traditional way that tech typically does, where there's a new technology, it creates this massive new market opportunity. Instead, you're taking an industry that's already huge. There's already, and it's being done in a very distributed way, kind of a cottage scale. Anyone who's too big will get in trouble, but it's a very fractured supply chain, but it's serving this massive market all over the country. And there was a history in California of medical legal cannabis that was very interwoven with the illicit industry in the state and the rest of the country. And so I had seen over the first couple of years getting into the industry that it wasn't this brand new customer who's just getting brave enough to try their first edible. It's not the soccer mom who's switching from wine to weed. That's the big opportunity. Like the killer product in weed exists and it's just weed. And so I wanted to focus on helping to address that heavy user that represented the legacy purchasing volume, and who I saw a lot of risk of them leaving the medical legal market in California and instead switching back to just the illicit market in terms of their supply, as pricing, taxes, regulatory load and rules, that you required you to come into these locations and not be able to get weed delivered after 10 p.m. and supply chains that were just really long, because product had to be packaged earlier in the supply chain, and certain distributors go through sales teams and then into the retail and then have to get to you. And so you went from dispensaries that had bags of weed on their shelf that would package it for you when you came in the door, to having to have the weed go through that whole supply chain. So the weed wasn't as fresh. So there's all these problems that are turnoffs for a heavy user in particular, from buying from the legal industry. And at the same time, I saw that those customers preferred to buy weed from the legal industry. They'd rather come into a medical shop and get weed from farmers they know. Like, people like knowing about the craft of things they consume. That's why even in cannabis today, you see a ton of energy at the premium level around the new genetics and new kind of nerding out on grow methods and things like that. And so I didn't think that we should just give up on that market opportunity of people buying from the illicit market. Instead, I wanted to turn all those problems into the solution. So with Flower Co., out of the gate, we were really focused on making sure our price was competitive with the illicit market. And we did that by taking a lower markup on third-party products, and having house products that had higher margins on them that we were producing internally, and by having pre-scheduled delivery instead of on-demand delivery. And that was the first way we really addressed and usually when people have this big vision of what they're trying to build, and we're trying to build the best place to buy weed, you can think of all these different vectors, and over time we added those in. So we started with the price point, and then we layered in having more product depth than other people, because we didn't have to have all of our products in the back of each car. We could just send you what's being delivered. And then we also layered in freshness. And these are all things that, as a team that likes weed, smokes weed, we knew we wanted. And by building that into the product experience, we could win back similar users, these heavy users who are being turned off in the illicit market.
Yeah, you bring up, I remember this is another core part of the thesis, which is that part of it is really understanding who your customer is and providing a uniquely value proposition for what are their characteristics. In this case, you have the quote unquote weed whales, and the nature of how a lot of people consume weed is they do it in bulk orders. It's not like they're getting like a McDonald's delivery, every other day. It's that they tend to kind of do one big purchase and then use that for the next 3 months, 6 months. So there's this kind of unique nature to how people even engage with the purchasing of weed that makes it actually better set up for kind of this wholesale, higher volume kind of play than just kind of if there's someone just kind of getting a one-off order. So your platform was interesting because it catered to that unique characteristic of how people are actually buying weed and providing a model that actually makes it price competitive to the illicit market, which was pretty fascinating.
And we kind of realized over time the extra layers that you can put on top of that. And so, as we went, we started to have ounces instead of eighths, whereas most of the retailers were focused on only having eighths available because they didn't want to they didn't have as much medical customers buying from them, and they didn't want somebody to be pushed over their limit with that one SKU. Whereas we saw ounces as a great way to pass savings along to customers. And then we did a similar thing with packs, where you can buy 8 packs of the same product, 8 cartridges of the same product, and get a better price. And so, when you think of like what gives us a sustainable competitive advantage, some of it comes down to knowing your customer, listening to your customer, and continuing to try things that layer on top of your core differentiation. If we stayed where we were in 2018, we would not be competitive today. But if we did all the things we're doing now back then, we would have gone, competed even faster. So
Yeah, correct. It's kind of the I think you've evolved very appropriately, and I think in looking at how you guys, I think going after market, when we the first time, because we've now invested in multiple follow-on rounds. In that first investment, I remember going to the location that you guys had in San Francisco, and you've kind of grown from California and San Francisco to now a pretty much almost 100% or so of California. I think at least like 70, 80% now, I think is your coverage in California. And now also looking to kind of expand across other parts of the United States. Walk me through a little bit about what the mindset was too about kind of where you can launch from a market perspective, and how do you think about the overall thesis as a United States play versus just a California play?
yeah, and I think I learned a really important lesson from building Flower Co. because in hindsight, I actually think that if we had focused on one market, one part of the state for longer initially, it would have allowed us to have a higher proportion of the money we've raised go towards user acquisition in terms of ratio of the total dollars. Instead, what we did is we launched in Oakland and in the whole Bay Area, and then turned on Sacramento, turned on LA, turned on San Diego, and they're all now profitable boxes in their own markets. As a business, I think we're on track to be profitable in the next month, in terms of covering all of our overhead. But if we had focused on just one market, gotten it really dense, driven up scale, and then added the next market, we could have saved a lot of money and been more user acquisition focused. So when I think about going into other markets, from a tactical standpoint, I do not plan to, let's say I went into Massachusetts. I'm not going to go into like Northampton and Springfield and Worcester and Boston and all these places out of the gate. I would pick like one city or one neighborhood of Boston and own that block, and then scale out to the rest of that area. And I think that is partially driven by the capital environment that cannabis and tech in general, but cannabis in particular, faces, which is not one where you have enough supply of capital to just blitzkrieg and be in all those markets with full marketing spend behind you in each of those areas out of the gate. So, when I think about our less the tactics of how you enter a new market, but from a general like kind of business strategy, we're trying to be default alive, able to drive our own growth through EBITDA and have a profitable user acquisition engine that has a payback in the 6 month or less range. And I think that if you have a strategy in cannabis that relies on having blitzkrieg capital, you might have it during certain phases in the industry, and then it goes away, and you're left in a position where you're really in a bind. So we've kind of avoided that. I think from a product experience and like product strategy standpoint, the greatest evolution that we've had in our model has been to rely more and more on our house brands and house products. We have both the kind of Flower Co. branded products, as well as other sub brands like Variety Drugs and Mogon that have allowed us to, over the course of this past year, increase our house share from in the 20% to topping 40%
Wow.
for certain months. And I think we'll see that trend continue to increase, and by the end of next year be in the 50% range of revenue. We're already over 50% of pieces. And so that does two things. One, it creates lock in with your customer on your brand and user awareness of your brand, because so many people are trying your products and their friends are seeing those products. But you also have a better margin profile. So our gross margins have gone from our product margin, so margin on the product sales we have gone from being in the high 20s to being in the 50% range. And so the contribution margin's higher, we can pay back faster on the users. So I think that from a strategy as we go to other states, we have the ability to take those brands and do licensing deals to bring our brands in other states, as well as bring brands from the people we're partnering back and put it on our shelf here in California. And that allows us to create awareness, create the supply chain with partners in those states, and then use the sort of MSA model where we do a management service agreement to operate a portion of space in that new state for delivery. So this allows us to not be as capital intensive as someone who wants to, buy the supply chain in that other state, buy a delivery license in that other state, and then push volume through it. It's a lower capital risk, but a little lower reward too, because the partners end up making more of the margin from that as an entry point. But over time, you can verticalize, and maybe you acquire that partner, or you buy assets in that state as their more plentiful number of assets. I think the general trend is towards more licenses and a lot of locations. So it's easier over time to get into states. So
Yep.
that's how we're thinking of going to other locations.
No, that's fascinating. And on a lot of, given that you're a consumer marketplace for the most part, a lot of, I've been investing in consumer brands, for the last 10 to 15 years as a VC, with, notable ones like being the largest investor in Beyond Meat and other fashion and food and beverage brands over the years.
Yep.
And brand is so important, especially when it comes to brand perspective and actually the channel of how people engage with that brand. And I think you're so right. The value of being able to not just be a marketplace where people can buy, but also being one of the core brands that people are buying becomes its own channel strategy in an industry that has continued to be challenged, that you can't use traditional marketing means. So being creative where the extra amplification that you're getting by being your own consumer brand from a product perspective on your own marketplace becomes one of the core things to do that allows for additional marketing. I remember early on when we made, I think it was maybe after our first investment, was when you guys started building out a lot of YouTube videos, and some of those are truly incredibly creative videos that you came up with. I remember the one about kind of will you dab with me, as if you're asking someone to marry them, or the kind of looks like a recreation of a scene from The Notebook when you're trying to break up with your drug dealer, but instead you're going over to Flower Co because you have a better experience. Like you guys were really, really creative as a brand in how do you engage with consumers where you can't do traditional Facebook advertising. And so I guess from a channel partnership strategy, how did you guys think about the overall thesis? Because that's one of the core limitations of the category is you got to get more creative in how you do marketing. And so whether that's through obviously general, driving organic growth by people coming to the website, through having any relationships with retailers beyond just people learning about online. But what's the thought process of how you've kind of, from where you started to kind of where you are now, and that overall growth of how do you kind of optimize overall channel strategies?
Yeah, no, I think marketing is one of the biggest challenges for anyone who's direct to consumer in this industry. It's why it's a lot easier to grow a brand to $1 million a month of wholesale sales than it is to grow your direct to consumer relationship to that level. But once you have that relationship, you have a lot less risk because you're connected directly with them. You control the experience a lot more, better lock in. So there's a little bit of a trade-off there. And I think early on, when I was evaluating the results of the marketing that we were doing, I was very short-term focused on what's the CAC from this campaign? How does that compare to my LTV of a customer? And what does that drive for payback for this work? And I think over time, I've started to recognize that there are multiple parts of that conversion funnel that if you do certain types of ads, you end up or just marketing in general, you end up generating a lot of awareness that might take some time to turn into a conversion. And so if you're just judging it on conversion of new users within 30 days or something more short term, you end up sometimes turning off marketing levers that are really working for you. And then the other piece that we found was that all of the activities we were doing, because they're primarily local marketing actions, were more effective when we were doing them in unison with each other than individually. And it's kind of at odds with the performance marketing like historical approach when you have access to Facebook and Google at scale, where you can measure things very specifically and know this is giving me exactly that. And so it's harder and there's a little more judgment involved in it. But in some ways we were more prepared and less affected by the way that Apple's changing of privacy has affected the quality of those other ad channels. So maybe we got ahead of it. But we've really found that the kind of combination of digital programmatic work, as well as some localized print or billboard and mailers and some other things like that in unison is the best package. And I think one of the reasons I'm really excited about getting to being default alive and then profitable this year is the ability to do some marketing campaigns that are more long-term focused, brand focused, and bring back some of that content type work that we were doing before. I think that it's always been very helpful in our positioning with our brand voice, and people know who we stand for. We stand for the young adult stoner who wants a lot of weed and isn't ashamed of their use of cannabis. So I'm excited to be able to put resources into that sort of long-term work, as well as into the more direct campaign work as we move forward.
No, that's and from a brand perspective too. It's what the brand means, not just to the consumer, but also I think from the brands that are being sold on Flower Co. Because you guys are providing a pretty powerful solution as a channel solution for a lot of other cannabis brands besides yourself. I guess when you're thinking through the value prop of how do you become the best place for other cannabis brands to be sold other than your own, I guess what was the thought process there around how do you kind of make the best place of where they can get sold in high volume?
Yeah, so some investors have pushed me and said, well, with your model, you're not going to be able to retain brands. How's this going to work? You have all this channel conflict. And I think the reality is we haven't been impacted by that very much at all. We sell the best brands in California, including our own, but also brands like 710, Cookies, Steezy's products, Cannabiotics, and brands haven't pushed back on being on our channel. And the reason is that because we control our relationship with our customer, we get paid and we pay the brands, and somehow that's a differentiator in our industry. A lot of people do not pay the brands they work with. We've always been very consistent on that front. And we also allow them to tap into this consumer who isn't buying from their brand if they're not buying from us. These consumers are switching to buying from their friend of a friend or the illicit market, the trap shops that still exist in many places in California, instead of picking this brand up in the store. And so I think that value proposition and that customer that we're focused on, that heavy user, has been very exciting for the brands. And then the other part of it is some cannabis retailers are not just marking up 2x or 2.5x, they're marking up 3.5x. And it's such a crazy markup. The brands will use us as a lever to prevent the other retailers from going too high. They say, hey, how are you going to do that if Flower Co is selling it at X price?
Yeah, that's
And
smart.
that's helped to pull the other retailers, just to stay a little more realistic. So
Yeah, it's actually, it goes to another question I was having for the magnitude of improvement from the individual buyer. What's the easy way to kind of think through that pitch? When they think about the price savings that they're going to get on average compared to the illicit market or compared to the current legal market, how I guess how has that evolved in the mind frame of the buyer of how much of a deal I'm getting by buying through Flower Co. compared to just the traditional means that aren't doing it more of a discount play and or buying it from the illicit market.
yeah, so our third party brands are ranging from 30% to 50% less than the same brand in a competing retailer. There are a few times where brands are also sold by their vertical a retail chain that owns them vertically,
Mm.
where we're closer to that 30% or maybe 25 in that situation, but generally we're in that 30 to 50% lower than retailer range. And then our house products are about half the price of our third party products. So you end up saving versus a equivalent like cartridge or indoor flower or basic weed ounce. You're saving an extra instead of being 30 to 50% of retail, you're at 50 to 60%, 70% less than retail price on some of these things.
No, that's
Um,
amazing.
and so it's an incredible deal. People often, competitors will ask me like, "Hey, you must be just losing money on that product." I'm like, "No, that's our highest margin product." It's definitely a great deal for the customers. In terms of compared to the illicit market, it's kind of tricky because there's two levels of the illicit market. There's like trafficking level, like bulk prices. If you're buying
Sure.
1,000 cartridges versus if you're buying just one or two or three from a dealer. And I think that we are competitively priced even after tax with dealers on our manufactured products, gummies, cartridges, concentrates, things like that, as well as on our flour. I think flour is the one where, because there's such a it's a dynamic market that moves up and down more. That's one where we sometimes have to price check and make sure we're staying competitive. But we don't tend to beat the illicit market on price, but our goal is really to match the illicit market on price while having legal products that are tested, that are fresh, that are from brands that and have an easy, consistent, reliable experience. Like drug dealers are not delivering you your weed on time. We're 94, 95% of our deliveries are on time, and we have we resolve issues very quickly. So I think like the overall experience competes on price and beats the illicit market on a lot of other
I think
levels.
that was again for another thing that was important to us for not a lot of VCs will put their foot into the water and investing in the cannabis space. We were able to do it more easily because we had a syndicate model, so we can kind of segment individual deals from the overall fund. But the play there was that if you're the space is going to be a space and it's going to keep on growing. If you really want to make the best version of it, you want to have an approach that provides a healthy way of consuming it. So you have a much more regulated and tested products. You have a better service, to your point, kind of getting higher quality of delivery service. And the product that you guys have also developed, especially on your private label brand, we've been in particular just the ones that I've seen. We've had a handful at our office on the gummies in the last like 12 months at our office, and the quality of the packaging and like the quality of the actual gummy itself, and just the product, the feedback that we've been getting from other people that have been using the products has just been superb. Like you've kind of really elevated the quality of the consumer experience when they're actually consuming the product. So that is one that when you think about like the highest quality of what one could deliver from a brand experience, you guys are knocking it out of the park from just what we've seen from the samples that we saw in the last 12 months.
Thank you.
Um, the as you kind of went out to kind of raise capital too over the last multiple rounds. You guys have also some of pretty notable overall investors. I'll just not say the ones that are not as public, but you certainly have kind of gone forward to doing bringing into really a lot of the core industry players that most founders would love to
Yeah.
have as as investors in their company. What was that process like for you? Kind of when you're going out raising capital can be tough enough, but when you're doing it for the cannabis space, you have some pretty notable investors that are more open to certainly investing in ones that have also done investments in the psychedelic space outside of just even cannabis.
Yeah. No, I mean, it's never fun raising capital. It's you're always going to get no's, and it's always going to take a little more time than you think it will. And I think it all has come down to um, uh, building relationships with people that inspire confidence in you and trust in you, so that as you're in those moments where you have an opportunity that can be accelerated with capital, they want to connect you with investors that are relevant. And I think like it's really easy for investor or for people fundraising to get in a mindset of like, I need them, I need their money, I need them to come into this. But at the end of the day, you're providing this opportunity for them to participate and benefit from this awesome thing you're doing. And so, with those, when you're going and asking for introductions, it's actually good for those people who are making introductions for you when when they've seen you talk about what you're doing and then beat those expectations. It's like it's exciting for them to be able to connect you with the person that they know who has invested in weed or is curious about it. And a lot of times those conversations end up going nowhere because the cannabis industry tends to have more family offices, more angel investors in it, and the cannabis funds that are focused on the industry are a pretty small group. So you're never guaranteed that that angel investor or family office is in its cycle of wanting to actively invest in venture at the time. But I think it's just about building those relationships, keeping them aware of what you're doing. And there's definitely some kind of psychology where once you get one of the investors in a group to come in, all of their friends who you've been talking to or know get excited about it too and come in. Now you got this party round going on. So I think that it's one of those reasons why when you're raising, it'll feel like it's going to keep going on forever, and then it'll suddenly all come together. Is that sort of dynamic? But I'm really proud of the cap table that we built, and being able to discuss our strategy with them, get their feedback from a mixture of family offices, from founders of companies, as well as traditional VC and people who have been in VC but are retired and doing personal investment. It's a really nice mixture to help me think about the evolution of the strategy in an industry that is constantly evolving.
Yep. And for I guess in thinking about the future too, I guess what do you see right now from more of a the future of the weed industry, and how that kind of plays into the future growth of Flower Co. Because they're really kind of evolving almost at the same time as things start happening in other states. That's kind of then naturally the evolution of Flower Co.'s expansion as well. But what do you see right now? I guess is some of the more critical evolutions that are kind of coming, and how you kind of think of Flower Co. itself as evolving going forward.
Yeah, so I think there's like two big forces that are pressuring the industry and challenging a lot of other models. And I think that we're actually in a position to continue to grow with those forces and actually service customers through those forces better than other people. have structurally higher markups or structurally higher overhead, and aren't as scrappy as we are. And those two forces are really decriminalization and legalization across wider parts of the country without federal regulation or access to those markets is a big driver. And then in parallel, just downward pricing pressure from oversupply. And they're actually interrelated, but they, I think, are useful to think about separately. But the first one, when you have states that decriminalize and they don't have legal weed there, but now cultivating a small amount in that state or cultivating a large amount in that state, but you still end up with lower consequences than you had before. And so the relative risk profile of growing an indoor in New York and then using it to serve the market there locally, or having bodegas that cover the city where you can buy weed from, versus previously being done by courier services or the weed being shipped from California over, is just changing the supply and demand in other parts of the country for product. Because even though California is a regulated market, we all really exist in one big market. Weed gets diverted out of the legal market, and it has that lack of demand for bulk product in California is causing people in the California market and in other states that were export states to have less revenue. There be more supply sitting in those states, and that's driving the prices down across the country, just because there's more decriminalization makes it less risky to grow stuff. More stuff's being grown. Places like Oklahoma, there's crazy large grows that are not regulated very well. And so that pricing compression then causes order values and the overall market to compress a little bit. And that is particularly the case for retailers that have a user base that aren't as heavy of users as ours. And so our users are like, sweet, prices are a little lower, I'll buy an extra eighth, and they just smoke a little more, they consume a little bit more. And so our order values haven't been impacted in the same way that other retailers have. Because they have so much fixed cost in their business model, that reduction in revenue, which many retailers in California have seen 20 to 40% year over year revenue reductions, is very bad for the net income. They end up having loss on the business. And so I think that oversupply and price compression that's driving it is partially from decriminalization, partially from the kind of COVID hangover, like the increased demand from COVID going away as people switch to drinking more with friends, going out. And I think that because our prices are competitive with the illicit market, they don't have this huge retail store markup in them. We end up, even as the world decriminalizing and there's bigger illicit market pressure, we're still able to compete with that, whereas the regulated stores are getting more pressure from that pricing. As investors have looked at this dynamic and said, okay, let's step away from this a little bit. Let's not put as much resources in here for a moment. Wait to see what the strong people that survive, who's worth putting more resources into. We're on the cusp of profitability. We'll be able to grow with our own profitability this year, and doing that and growing as others are struggling will put us in a really good position over the next 12 to 24 months to grow our business, take more share, but then be poised to either fund going to another market by ourselves or raise more capital to take advantage of that in the future. So a lot of people are kind of doom and gloomy in their own part of the industry. I definitely wish that it had some different dynamics happening that would make it more prosperous for everybody. But the nature of this industry is actually, I think, working pretty well strategically for us.
Agreed. Yeah, it's almost in some ways it's kind of nice that the United States has not quickly legalized cannabis because it actually gives you more time to get prepared as the more markets slowly are opening up more and more too, which is a benefit for evolving as the market evolves. As a, I guess on kind of final question, share a little bit about your background because you have a pretty unique background. I think when people think of people coming out of like big corporate finance or some of the big consulting firms, they don't always think about the people that are also, looking that they're kind of big weed smokers as well. You kind of provide this interesting way of most people that are probably, the stereotypical of smoking weed are not the one that you'd feel confident could go and scale a company really, really big. And so talk a little bit about your background and kind of advice that you would give to other founders, kind of any kind of one or two core parts of wisdom that you've had through scaling the company now over a good number of years to where you've scaled revenues significantly, now getting to kind of the rare moment where a company can get to default alive versus default dead with being profitable, something that rarely startups ever even get to achieve, but with a huge market still in front of it to grow into. Kind of you share maybe a few different pieces of advice based on your own experience.
Yeah, so I got in the cannabis industry beginning of 2016. Before that, had been at McKinsey for about 3 years, and when I got in the industry, it was still in the kind of gray market, wasn't fully legal, it was medical, but it was clear that in the next couple of years it would start to get legalized. So I have the kind of unique experience in this industry, not just of being kind of combining McKinsey finance sort of background with cannabis background, which is unusual, but having been in the gray market, operating, doing bulk wholesaling, doing everything I could to bootstrap my company, and built respect for from other people of what I could do, but also learn to respect the capabilities of the existing people in the industry as well. And a lot of times they don't really believe in their own kind of business skills as much as they should. Like they've been able to build businesses without being able to write anything down for decades. So like there's some skills there that and they've had to figure out how to trust. And there's a lot of skills there that I think go underappreciated. But I think the main pieces of advice that I'd have are, really like be 100% responsible for the things that you do. When you say you're going to do something, you have to do it, or people aren't going to trust you, and you'll be able to ask a lot more from people when they know that you're reliable when you say you'll do something for them. And another way of thinking about 100% responsibility is being willing to own mistakes you've made so you can learn from them. And that is critical, because if you don't do that as a founder, then your team's not going to do that. And everyone's going to be pointing fingers at each other internally or externally at other companies. And you're never going to build and learn from your mistakes. You're just going to keep doing the same things over and over again. And I've seen a lot of cannabis companies do that. A lot of inexperienced founders, or people who just don't have the maturity to own the responsibility of the issues. So I think taking 100% responsibility for your role is really critical. And then just having a sense of urgency and relentlessness is also very important. Just constantly pushing the ball forward as quickly as you can. I think like when I was in college, I was part of this like hacker house called Hackseaville at UVA, that I think Alexis Ohanian from Reddit had helped to fund. And everyone else there except for me and my friend were developers working on tech stuff, and I was building an eyewear startup. And I got respect from them by just constantly showing up every week with massive progress on creating a supply chain, or figuring out the tech, or starting to go to market, and like finding customers who wanted the thing. And I think that got me addicted to the urgency and relentlessness, because I like to show people I can do things faster than they think is possible. But when you set that pace, and your team is set following that pace, you'll move faster than other people can. And just culturally, when you're not in the room, other people on your team will push to get stuff done faster than other people can. So I always ask that as a question when I'm interviewing someone, just like, tell me a time where you wanted to get something done faster than other people thought was possible, and what did you say to get it done? Like, how'd you do it? Because I think
That's a
they
great
can't
one.
think of a good example. It's like really shines. So I love that question. But the third one is one that like I think should be obvious, but it came up on a call I was having with a partner, and they were describing. I asked them like what their plan was, what their strategy was for getting something done that was a very operationally intensive thing that I would have planned in Excel, the exact flows in and out to make sure it worked. And I was like, "What's your strategy?" And they were like, "Hope is my strategy." And
Oh,
I was
that's
just like,
scary.
"Hope is not a strategy." So that's like my third one. Is just like, hope is not a strategy. That never is gonna work. So I'd leave it at
I
that.
can see them saying that as they're taking a smoke.
Yeah.
That's yeah, that's not a good answer. No, that's a really good point. Yeah, it's been truly inspiring to see being one of your earliest investors coming in at the seed stage as you were coming out of YC, to how you've grown this into a really scaled company, and kind of again really becoming that the next leveling up, and becoming a profitable company while continuing to scale. You've proven, obviously, you've gotten the attention of some really well-known VCs and family offices, and you've also kind of scaled into the kind of the world of not just venture capital, but even kind of earlier private equity funds taking notice that this is a long-term growth company that can be really, really valuable. So, congratulations on it's been so great to have gone through the journey with you over the last 5 years and continue going on for the years ahead. But yeah, thank you. This is one of the portfolio theses I was really looking forward to because it was one of the earliest investments that we've made. In I think it was like in probably the second part of 2018. I think we kind of made the decision to make the investment, and yeah, couldn't be more proud of what you've been building. So
Thank you
thank
very
you
much.
for doing kind of the revisiting of the thesis for when we were originally making that first investment, and then kind of continuing to support you for the future rounds that have happened since then. So thanks again, Ted. I really really appreciate this, and looking forward to the continued success at Flower Co.
Thanks. It was great chatting today too.